Let's bring in the financial expert, Peter Komolafe, for more on this. Peter, it's good to have you with us. What did you make of the fact that it's still at 4% for another month?
Well, when we consider the news and the rumours from the past couple of weeks, I think there's a little bit of a relief that we're flat today and it hasn't increased. Because I think ultimately when you think about interest rates and the levers that are available to be pulled for this, it gives the Bank of England a little bit more breathing room in terms of making that decision as to whether or not they increase interest rates, which is what I think most people don't want to see. So it's a relief. I think for households, though, there is still this real concern that, whilst the cost of crackers and cakes have reduced and offset this energy price increase that we've seen, the average typical household in the UK is still paying £1,928 a year for their energy costs, and food prices are still relatively high. So headline figures, this is good news. However, there's still a lot of work to be done.
Yeah, and that's the point, isn't it? Because despite, as you're saying, overall it feels like it's good news. People still aren't feeling that really in their, in their weekly shops and in their bank balances.
That's right, and I think that's where the rub is really. I mean, there is only so much that you can do in terms of, and I think part of this is down to people's understanding of inflation and how that actually works. But the truth is, we're 2% higher than our inflation target. It doesn't feel as though things are getting better for everyday people because of this, the cost of things going up, and costs are still going up, just not at the pace that they were before. And I think when you boil it down to that as a topic and a piece of conversation that is going to be had around dinner tables, that's what matters to people.
And interest rates, of course, are at 5.25%. We're going to get the next rate decision soon enough. What's your expectation that the bank will do?
I think they're going to have to hold. I mean, there are probably a few people that will be crying for the interest rate to increase, and there's probably an argument that they could have increased it already to try and see if we could get inflation down a little bit further. But I'll be very, very surprised if there are any rate cuts anytime soon, really. And I think when you go back to when this all started, Jeremy Hunt and Andrew Bailey were very, very clear in their messaging that we would do what is necessary to bring inflation down. We're at 5.25% right now. I don't think rate cuts are going to be on the agenda at the next meeting. I think if anything, they'll hold. There may be a vote to increase it, but I just don't see them doing that.
Yeah, and if the plan is successful as they would see it, we will see inflation coming down. In terms of the level of interest rates, Peter, do you think that we need to start getting used to it being around about this sort of level? We had historically low interest rates for such a long period because of the financial crash and other factors. Is this about where you guys think it will sort of settle once, if anything settles?
Well, that's a good question. But when you look at interest rates historically, when you average it out, this is probably about the average. I mean, what we've seen where we've been able to access mortgages at, 1.5%, and the interest rate being at 0.5%, that in itself is the anomaly. That is not normal. Where we are historically is normal. So I'm saying to people that I work with, expect that interest rates will sit around about here. If we're lucky, we might see them go down to 3%. 4%, but I think we're probably around about that ballpark right now.
And Peter, there's always this debate, isn't there? Because obviously with the interest rate at 5.25%, it's expensive for people with their mortgages, but also you've got to think about the savers as well. And there's always talk about whether or not this is going to feed through into savings rates. It never seems to get there quite in time, does it?
No, it doesn't. And I think that's probably one of the biggest debates that I have with people that follow me is if you're borrowing money, this is not good news. But if you're saving money, we've seen historically low interest rates for such a long time. Now people are able to get accounts that will pay them a decent rate of interest. But, the reality is unless we see another rate hike by the Bank of England at some point, which we might get next time, but I don't think we will, savings rates are also probably where they need to be, unless the banks are trying to drum up competition and maybe want to attract more customers. We might see a bit of an uptick in the savings rate, but we never get that full benefit of a 0.25% base rate hike in savings accounts. We just don't get it in the rates.
No, not at this point anyway. All right, Peter Komolafe, really good to speak with you. Thank you very much for your expertise and time this afternoon.